Hello everybody, myself Tanvi. I'm here again with a new topic of corporate law. The name of the new topic is corporate securities. In this particular topic, I will discuss types. What are the types of securities are there in the market? First, I will discuss the types of equity securities. Then, I will discuss types of debt securities. Then, what are the regulatory regime? What are the exit options? And what are the investors which play a very good role in these corporate securities, and how investment is made in equity shares. So I think I have already covered a proper many lectures on what is share and what is debenture, and what are the different kinds of shares. Shares are of two types. I also clearly told. I have also compared the concept of share with a full round pizza and a round cake, wherein one share is equal to one slice of pizza. And I think I've drawn a similar simile with respect to in order to make you understand. I've also told shares are divided into two: equity shares and preference shares. Equity shares are of are investment in a very risky manner, wherein equity shareholders are of two types: with equity with voting rights and with differential rights as to dividend voting and otherwise. The concept of equity majorly depends on how much the company earns profit, but on the other hand, preference shares are investment made more in a very in a fixed rate of interest. Profits on a company do not vary. The money earned because of preference shares are not affected because of profits. Preference shareholders get a specific and same kind of rate of dividend out of the profits which they get. I've also discussed compulsory convertible, option convertible, and non-convertible. I think all these kinds of shares I've already discussed. Question arises: where is the restriction of the kinds of instrument foreign investor can invest in, and why? Um, Now, this question I'm posing to you: whether do you think that restrictions on these instruments are the foreign investors restricted to opt for these particular corporate securities? If yes, why? Let me know your suggestions. Let me know your answers. Please write your answers to me on my email address. And I've also covered the concept of debentures, which debenture is kind of a loan which a company gets from the general public. Shares is kind of an asset to a company, but debenture is kind of a liability or a loan to a company, wherein you will have to pay a fixed rate of interest. Debenture can be convertible. It has one of the major feature of convertibility, that is fully compulsory convertible, optional convertible, non-convertible, and then there are many kinds of debentures like secured debentures and unsecured debentures. There are some debentures which are listed in stock exchange, but there are certain debentures which are not listed on stock exchange, and other kinds of debt. Uh, Debt in terms of corporate securities is bonds. Bonds can be domestic bonds and can be foreign currency convertible bonds also. Domestic bonds are majorly government bonds only, as in, for example, government is initiating government bonds in order to construct a particular road. The elevated road which you come across has been collected out of government bonds, which government initiated 5 years back. Majorly infrastructure process is done through government bonds only, and e-notes, as in short-term e-note or long-term notes. And also debt can be of another type of commercial paper which is extremely short term, maturities between a minimum time of 7 days and maximum of 1 year from the date of issue. So once I will discuss kinds of market, there are two kinds of markets. First is uh, uh, money market and capital market, and then there's another kind of market also known as derivative market. Derivative market is not specifically provided in any of the books of corporate or investment law, but this is but the derivative market has is a subset of capital market, but now slowly and gradually it is gaining a, a, a reputation of a separate market itself. Money market is those instruments where which do not last for more than 1 year, and notes and commercial paper are part of money market also. Then there is the other kind of debt or corporate security is corporate deposit, any receipt of money by way of deposit or loan or in any form of the company is corporate deposit. What is the regulatory regime? Following laws are very related to these corporate securities. So it's like Companies Act 2013, Companies Share Capital Debenture Rules 2014, SEBI Issue of Capital and Disclosure Requirement Regulations 2019, Annual FDI Policy, Foreign Exchange Management Act 1999, wherein foreign exchange management transfer or issue of security by person resident outside India, Regulation 1000, foreign exchange management transfer or issue of any foreign security, Regulation 2004, pricing guidelines. Pricing guidelines, annual ECB master circular, SEBI issue and listing of debt securities regulation 2008. What are the exit options? Exit options are those options wherein the shares issued by the government and issue the shares uh, subscribed by the general public. The company gets back that share again from the market. Those are known as exit opportunities. For example, there are many kinds of corporate securities which a company come up with. I already discussed a lot of types of equity shares, preference shares, and different kind of bonds given by the company. But opportunities are those opportunities where the company gets those securities again from the public. Those can be initial public offerings, trade sales, buyback, and depository receipts. And who are the investors? If I talk about the domestic domestic investors, retail investors, banks, other corporates, qualified institutional buyers, government bodies. And if I talk about foreign investors, foreign institutional investors, foreign portfolio investors, foreign venture capital investors, qualified foreign investors, other kinds of investors, and what all laws are uh, related to investment in equity shares. Companies Act 2013, Company Share Capital Debenture Rules 2014, SEBI ICDR Regulation 2009, SEBI Substantial Acquisition of Shares and Takeover Regulation 2011. That's about it. Thank you so much.